Good morning, everybody. Welcome to another Mark Report brought to you by Mike Bjork. Today is Thursday, and it's November 10th. Hope you guys got some great upcoming weekend here. We do got a long weekend here. The markets will be closed tomorrow, so we won't be doing a report tomorrow. So the item we have right now is the weekly jobless claims, which last week we had 265,000 people apply for unemployment. Forecast for this week was 260,000, and we actually beat that at 254,000. So we got back down in the 250 range instead of the 260 range for people applying for unemployment, which is a good sign. We'll probably start seeing this improve a little bit more as we go into the holiday season, as a lot of the retailers will be hiring more seasonal people for the extra shopping for the holidays. So let's go and take a look here at the headline news. Stock market's a bit mixed. The only one that's up is the Dow. The Dow is actually up over 100 right now. It's at record highs right now. It opened at record highs. Yesterday was a big day for it. It went up after being in the futures were showing negative 800 during the election, and then comes in hot yesterday at 256, closed up 256 yesterday. So 1,000-point change there. Now, in the stock market, you're going to see them kind of repositioning themselves as they were positioned for a Hillary win. Now they're going to be positioning for, now Trump had won, they're going to be positioning themselves as to what sectors might be better positioned underneath the Trump's rule here, or presidency here. So you're going to see some modifications going on there. Some of the ones will take some benefit with infrastructures. He'll be creating deregulation in the banking areas or in the financial areas, stuff like that. So creating more infrastructures out there in the country as well. As a result, so what happened was yesterday the stock market was way up yesterday. Right now, so far, the 10-year Treasury jumped up, so the global yields are going up really high. It was not too long ago when the 10-year Treasury was down to about 1.7. Actually, yesterday morning it was at 1.7. Jumped up 2%, over 2% right now, and we're at 2.084. The German Bund, which was actually at negative 0.2, now is at 0.285. So on a global level, the treasuries are getting a lot of the investment dollars here, as well as the stock market. So globally, the stock markets rebounded yesterday, and as a result, kind of took the lead there. All this after the effects of course, the Trump election here. Now, so let's take a look at the bond market. And why is the bond market taking? Obviously, the money, as we mentioned, are going into the treasuries instead of the bond market, and as well as going into the stock market. Now, one of the concerns is with the Trump presidency, they start doing all these deregulations, to tax cuts for corporations, to infrastructure spending, that is going to create higher inflation. The worst enemy for bonds is inflation, and as a result, you're seeing it kind of tank here quite a bit. We had a 97 basis point drop here, which translates to, if right here when we started, if 4% was our par pricing, which translates to the consumer as a no point loan, after the day it would cost them 1 point to get there. That's how much of a drop we had yesterday. Right now, as you can see, we left off here. We started off down here. We're down right now about 13 basis points. So translate pricing again worsened again today as a result here. So hopefully this floor will support us right now. We don't have a clear definition as to where our support will be. The last time we reached this level was back in March, and then we kind of worked our way back upwards. We could be thought of it may take a while, especially after the December Fed meeting. As a matter of fact, it was funny because before the elections, it was thought to be 80% the Fed funds future rate, 80% that there would be a rate hike. After the election yesterday, they said 50%. Now it's back up to about 70%. So it's now climbing up a little bit that the Fed will raise rates in December. So once the Fed raises rates, a lot of times we have the opposite effect where for the long-term rates, like here, mortgage-backed securities, those rates fight off inflation. Those are meant to keep us from inflation, and the bond markets typically like that and usually rally a little bit. So we may get a little bit of that rally, so to speak, in December. So this may take a little while to work our way back upwards, but we could have a little bit of a boost after the next Fed meeting in December here. Be cautious. It's very, very, as you can see, we had a pretty big significant drop here, and I think at some point we'll work our way up, but it could get a little bit uglier as well. next moment down, we could be down into the 99 range as well. It wasn't that long ago, about a month ago, we were actually about 104, and now we're down to about 101 right now. So that's 3 points in pricing change right there. All right, folks. If you guys want to get continued updates throughout the day, go ahead to Twitter and follow me at Mike Bjork. I do post daily updates. Yesterday was a little tough. I did have a class yesterday all day, and I was a little tied up, so that's why I had this a little bit earlier in the day, so my apologies. But you guys have a great long weekend. We'll see you guys on Monday. Thanks so much for watching. Take care.